Yes. Hello, everyone. Good morning from this part of the world. It's just 9:34 a.m. West African time. That's about 8:34 a.m. UTC. And depending on what time zone you are tuning in from, I do want to wish you a good afternoon and good evening. Welcome to today's session of our usual Forex Morning Mastery. And as we step into the second half of the week, I'm thrilled to see both our regular members and newcomers join us for another spectacular session. If you are new with us, and if this is your first time with us, please note that we host these live streams every Monday, Wednesday, and Friday to keep you informed and ahead in the trading game. Well, reflecting on our performance so far this week, I will say we've navigated the market with precision, especially with the assets we've been monitoring since the beginning of the week, which includes the USOILSPOT, the USDJPY, and of course my favorite, the XAUUSD. However, I must admit I missed out on that significant move on the US All Spot yesterday as we saw price drop to the downside. I think over 200 pips move as I was away from my workstation yesterday. But that's the nature of trading actually. Opportunities are ever present, and today offers a fresh chance to capitalize on new opportunities. So as we progress through the week, we are going to be anticipating increased volatility. Remember, I mentioned this on Monday. Major economic events pertaining to the assets on our watch list are going to be dropping in from today. And it's crucial we position ourselves strategically to take advantage of these movements effectively. And before we dive deeper, I would like to mention that if you find value in the sessions, please click the like button. Your support not only fuels my commitment to providing quality content, but also helps our community grow. As more likes we have, it increases our visibility through the YouTube algorithm. And thank you very much, guys, as you do so. So with that being said here, we will be diving right into the business. And as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that has been and will be influencing the sentiment in the market this week and for today, of course. And since we are monitoring the US All Sport, the USDJPY, and the XAUUSD, we have been focusing on features from both the United States and the Japanese economic docket. Now, so far this week, we've really not seen significant, let me say, high impactful event yet, besides the speech from President Trump on Monday when he welcomed the French president to his abode. And of course, there was nothing really highlighted as regards to the financial market yet on that particular day. And then we saw a couple of speeches from, not a couple of speeches, bunch of speeches from Fed officials. We saw Goolsbee speak on Monday. We saw Barr. We saw Barkin. And of course, we saw Logan speak. And from what we can come up with a little summary into what the narrative they've all talked about is that they will want to keep a wait and see approach. Currently, that means the chances that the Fed will be leaving interest rate higher for an extended period of time is still very much on the table. And of course, coupled with this tariff situation with the Trump administration, there is this tendency for inflation, hence the interest rate is likely going to be kept like that at least for the meantime. Then we also had the consumer confidence report, which came in yesterday. And in fact, from what I can see on the FX streets, it shows we really do not have any figures here, but I was able to go through some financial feeds, which furnished me with what the data was like, and we saw the US consumer confidence drop significantly from February's 105.3 to 98.3 for the month of February, which is a sign which indicates economic concerns in the United States, and this may likely lead investors to seek refuge in other non-yielding assets in the meantime, while they monitor what is likely going to be happening next. Now, talking about what is going to be happening next, today, Wednesday, February 26th, President Trump is going to be speaking 2 p.m. UTC. That's about 3 p.m. local time. So we obviously want to be hearing what he will say, especially as regards to tariffs. Remember, President Trump did emphasize on reciprocal tariff, which means that whatever the tariff any country subjects their imports to, they will also do the same to them too. Then yesterday, was it yesterday on or later on Monday evening, we also learned that Trump has finally confirmed that they will be executing the tariffs on Mexico and Canada, which could make the market a little bit volatile at the moment. And of course, we have seen some possibilities in that regard in recent times, which I will be sharing with you when we go into the chart. Then besides this Trump speech coming up by 2 p.m. UTC today, we are also going to be looking at a couple of speeches from Fed officials. We have Bostic, we have Baokin, all of which will be speaking 5 p.m. and 6 p.m. UTC respectively. Then tomorrow, Thursday, February 27th, we are going to be looking forward to a couple of high impactful events from both the United States and the Japanese economic docket. We are looking at the gross domestic product annualized for Q4 coming in 1:30 p.m. UTC tomorrow. Definitely everyone is looking forward to this, and this is one of the major reasons I'm saying that we are likely going to be seeing some high volatility move tomorrow. And of course, today we are going to be looking at the chart to set up a position that we can use to strategically position ourselves for these big moves. Then we're also going to be looking at this labor-oriented data. That is the initial jobless claim count, which is a weekly report that gives us that measures the number of people filing first-time claims for state unemployment. So this will be giving us an insight into the level of unemployment in the United States. So you want to be staying tuned to this one, as it's going to be playing a significant role in determining the direction of the US dollar tomorrow. Then we are also going to be looking at a bunch of speeches. Then another impactful event for tomorrow is the Tokyo Consumer Price Index coming in 11:30 p.m. UTC, and this is from the Japanese economic docket. And of course, we all know the Japanese yen has been doing pretty well since last week. Actually, we saw a very strong move to the downside on the USDJPY, and this is as a result of a resilient Japanese economy. We saw a very robust GDP report last week. We saw last month there was high inflation. We had increase in real wages. We also had the manufacturing sector do very well in the Japanese economy. And of course, there is a high expectations that the CPI data may come in a little bit higher than the previous month data, which may likely give the Japanese yen another traction. So this is another event we do want to be putting on our radar during tomorrow's trading session. So these are the major events we are going to be looking forward to. I encourage us all to mark out the timing of this event, as we will be ensuring that we are around to position ourselves for the next move. So with that being said, here we will be diving right into the business. So I see you right there, Soldier Pete. Good morning, morning to you from here. I don't know what time it is from your own end there, but I'm very excited to have you around with us this morning. So with that being said, here we will be diving right into the business, and as always, the first asset we are going to be looking at this morning is the US All Sports. And at the beginning of the week, we had some very good move. Remember, I had a couple of buy positions on the US All Sports on Monday, and in fact, I had my TP target at the $71 area. Remember, while we were analyzing this market on Monday, we saw a beautiful trading setup on the 1 hour time frame, and this was what we were looking at actually. So let me quickly run through what our expectations were during our session on Monday. So we had the range bound structure, of course, price action trading above that our key level for the week at the $70 mark, giving us an insight into the level of indecision going on in the market for the first 11 to 12 hours. And of course, you know how we use our range bound structures. We exercise patience, waiting for price action to either break down the support line to give us an opportunity to buy, or break out of the resistance line to give us an opportunity to sell if it breaks down the support line, and an opportunity to buy if it breaks out of the resistance line. And if you remember vividly, I already had a buy position triggered around the $70.21 level on Monday, and of course I did mention that I will be having another buy stop order above the $70.42 level, and thankfully we were able to be part of that first move to the upside, scooping about 60 pips on the second buy position and about 70 pips, I think 80 pips thereabout on the first buy position. And for those of us who are part of this move, well done, kudos to you for being faithful with our analytical approach. And as you will see, since then price dropped significantly from yesterday's Asian session. We saw price drop, breaking down the key level, and like I did tell you on Monday, that I would not want to sell, so I didn't place a sell stop order below the $70 area. Instead, I was saying that if price breaks down and retest structure, then I will be joining the bearish move. And unfortunately, I was not on my workstation yesterday, so I didn't see the shooting star candle. If I'd been around, I would have taken advantage of that move, but it's all well and good. We are back here today to see if we can see new trading opportunities to take on. Now, from Tuesday's trading session, we need to understand why price dropped significantly. In fact, it's a huge engulfing bearish candle, breaking down the $70 mark, and of course this unexpected decline in price could be attributed to weak economic data from the United States and Germany. These are two major economies. Germany is the biggest economy in Europe, and we are talking about US, one of the strongest country in the world. And the economic data from this economy have raised fears of a global economic slowdown, potentially leading to a reduced demand in oil products. Then, of course, the President Trump's announcement to proceed with tariffs on import from Canada and Mexico, including a 10% levy on Canadian energy product, has heightened inflation concerns, and this could prompt the Federal Reserve to maintain higher interest rate, potentially slowing economic growth and energy demand. And immediately this news was relayed to the media, we saw this immediate reaction pushing price significantly to the downside. Remember, Trump had placed on hold the tariff on Mexico and Canada. But surprisingly, he enforced it on Tuesday, and this has led to a, a, a push of price to the downside. Now, with the way things are going right now, it appears that the path of least resistance for the US oil commodity appears to be to the downside. So we need to have to keep our eyes on the weekly inventory data report from the API. We saw the API report yesterday. We saw a decrease of 640,000 barrels in US crude oil stockpile for the previous week. And this was contrary to the anticipated increase of 2.3 million barrels. So this is a surprise. This is an unexpected drawdown, and it suggests a tighter supply which can support oil prices. Now let me quickly explain to you in simple terms the theoretical understanding behind a decrease in US stockpile. Now what this simply means is that if the stockpile in inventory decreases, it shows that the demand in the market was way higher than the supply, so they had to come to the stockpile to take commodity to feed the demand in the market. So, and from our simple economics, when demand increases, what happens to prices? Of course, price is expected to rise. And because of this, we may likely see support in oil prices. Maybe it could be a temporary one. And of course, if you look at the character of price action since that engulfing bearish move, you will see that the market has been showing some support around the $68.85 level to show that sellers are finding it difficult to continue the downtrend move. And if this becomes, or if this persists, we may likely see a platform that could push maybe a temporary move to the upside. Then we're also going to be monitoring geopolitical events such as U.S. trade policies, especially Trump speaking today will be giving us clues into U.S. trade policies, international conflicts, and it could significantly impact oil prices. Now, for instance, the imposition of tariffs or the resolution of conflicts affecting major oil producers can alter supply dynamics. And we are also going to be considering the volatility that is likely going to happen in the oil market today. So we want to be implementing risk management strategies, ensure that we have stop losses in place, not the imaginary stop loss we use, but instead have a real stop loss in place, because the market could move significantly to any side. So it's prudent to employ risk management such as stop loss orders and position sizing to mitigate potential losses. Now, with that said here, what are the chances that both buyers and sellers have as we head into today's trading session? Well, for me, the unexpected decline in US crude oil inventory from the API report yesterday could be a boosting factor for the US oil spot. However, we cannot ignore the global economic slowdown concerns, potential US tariffs on Canada and Mexican imports, and of course the prospective Russian-Ukraine peace talks, which obviously could send price crashing further to the downside. Now, in preparation for today's trading session, I do have a simple trading setup we are going to be using to navigate this market today. So, of course, looking at the structure here, the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours, I've seen price action confined within the $69 level and the $68.85 area to emphasize the prevailing uncertainty in this market. Now, due to this uncertainty and the range bound structure here, we obviously want to wait and see price action either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So I have two positions triggered, so I had to close the buy position at this point, considering the bearish momentum we witnessed yesterday, and we already have price triggered the support line at the $68.85 level. So with a sell position triggered at this juncture, let's see how the market is going to play out going forward. So I already have a sell position triggered. Let's see how far this is going to go. My stop loss is way above the $69 area, and of course I have a strong feeling that price may likely crash further to the downside. And where can our TP target be here? Well, I will project this impulsive leg using my Fibonacci extension tool. So if we run the Fibonacci extension tool all the way through the impulsive leg, we aim at an area between the 127.2 and the 1414. So I'm looking at a minimum of 77 to about 100 pips. So let me just put it at 67. Let me put it here, 67.80 as my TP target, at least in the meantime, for this sell position, while we continue to monitor price action around this area. So that is my simple view here. We have a sell position triggered on the USOILSPOT. Let's see how far this momentum will go, and of course, if there is anything new that comes up along the line, I will be updating us on my Telegram platform. So that is my simple view on the USOILSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So I can see you, Ivan Gobunovas. Good morning to you. It's been a while since I saw you. Trust you're doing very well. All right. So, in the absence of no questions, I want to assume that we are all on the same page, right? And we've been able to mark out the structure. In fact, I strongly believe that this market will go to the downside. And it's looking more like a bearish rectangle. We have the impulse leg, we have the range bound structure where we already have a breakdown of the support line actually, and of course we also have something that looks like a pennant right here. So if I let me illustrate this for you to see. So we have this old move down, and then we have something like this looking like a pennant like this. Now we have this, and this is more like a bearish rectangle pattern. So for me, I strongly have a belief that it will go to the downside. But if it doesn't and we get taken out in a loss, then we shall be looking at price breaking out, retesting the $69 level to anticipate an uptrend move, maybe a temporary rebound. So that is what I am looking at on the US All Spot today. So I wish us all the best of luck on this asset. So moving on to the next asset on our watch list. Next asset we are going to be looking at is the USDJPY, and since the beginning of this week we have been buying this asset. Remember, we had a beautiful structure which gave us the intent to consider buying ideas. We had three parameters here. We had that descending trend line we marked out on the 4 hours time frame, which had been supporting the bullish momentum within the descending trend since the beginning of the year. Let me show you so you can have a look at what it is looking like. So this was what it was looking like on the 4 hours time frame. This was the descending trend line, and every time price action comes into the structure, we see buy pressure resume from that area. So let me give a visual representation of what I mean here. So look at this, price test it, we saw price climb up from here. The same thing also happened somewhere around here, and then we had another one here. And last week price action, as soon as it tested that structure, we saw buy pressure resume from that area. So we had the impression that this could incite new buying ideas this week. And secondly, we had price action sitting above our key level for the week, which is right at the 149.00 area. And if we go into the daily time frame, you will see how crucial this 149.00 area had been in this market. In fact, we went to as far back as 2 years ago, and look at how that same level, that zone, had served as both resistance and support line during this time frame. So it's a very crucial juncture, and for the fact that price action came back to close here last week, and since the beginning of this week we have noticed how sellers have been finding it difficult to break through. I held on to a bullish idea for this week. Now, looking at what we have here, we had a couple of buy here. Hold on a second, let me place my buy stop order just in case. Let me place my buy stop order now. All right. So since the beginning of the week, we saw this. We saw the week started on a very strong bullish note, and I can remember saying that I already had a buy position triggered on the USDJPY at the breakout of the resistance line at the 149.400, and I mentioned that for those who missed out, that they should wait for price coming back to retest, which actually happened, and we saw price move about, how many pips was that? About 80 pips thereabouts before this whole bearish move happened. And of course, you know how we do it. When price moves significantly in our favor, we move all stop losses to secure the buy position. And if you had done that, you will see price will have been taking you out with a modest profit, or worst case scenario break even. Now, as it is right now, we continue to see buy pressure evolve within this key level at the 149.00 area, showing us potentials that buyers still have a say in this market. And what could be the driving factor for buyers of the US dollar against the Japanese yen? Well, the anticipation of hawkish remarks from Federal Reserve official later this week will be one of the major factors. At least we learned from a couple of them. Which one of them again? Let me see. Goolsby, Barkin, and Logan, all of which were keeping the tone up for the US dollar, saying that they will be adopting a wait and see approach. And I think Logan said that due to these Trump policies, we may likely have inflation, and as a result of that, they will maintain the current interest rate, which is a very good supporting factor for the value of the USDJPY. So with that said here, the path of least resistance is looking a little bit to the upside, in as much as the Bank of Japan is expected to raise interest rate later this year. And then we also have robust Japanese economic data. The PPI came in very strong. Consumer inflation is strong. Real wages is very strong at the moment. And then what else again? The GDP, of course, at the beginning of last week was very, very strong, showing that the Japanese economy is resilient. And if we look at the declining US consumer confidence that came in yesterday, we cannot ignore potential that sellers can also come in. But with the way the structure is, and considering the fact that prices is still sitting above the 149.00 area, I will strongly hold on to a bullish bias. So buying now for me above the 149.400 is looking promising, though we have a sell position triggered already at the break of the key level. But let's see what happens, which is going to fall through. If the sell falls through, well, we are good. But if the buy falls through, then we will be taken out from the sell position at the 149.700, somewhere right here. So let's see what happens. We maintain a bullish bias here. So I'm looking at buying above the 149.400, and I will not consider selling unless price breakdown retest the 149.00 area. So this is my simple view on the USDJPY for today. Let's see how the market plays out. And as always, I will be updating us on my Telegram platform if there is anything new around this particular structure. So that is that on the USDJPY. Let's take 5-10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. All right. So, in the absence of no questions, let's move on to the next asset on our watch list. So after so the next asset we are looking at is the XAUUSD, and of course you can see after a choppy start to the week, profit-taking activities appear to have taken over the market. As you will see, after the price tested the all-time record high, these recent gains, we saw some investors engage in profit taking, which appear to have led to short-term downward pressure on gold prices, breaking down both the ascending trend line we marked out at the beginning of the week, and of course our key level right at the 2,925 level. And for me, this has shifted the dynamic in this market, as the tendencies right now is looking strongly bearish. Now, before we go into the technical details, let's talk about what really happened at the beginning of the week and what were we looking at. So at the beginning of the week, we had a range bound structure, of course. Within the first 10 to 11 hours, price was confined within the range right above our key level at the 2,925, and of course we positioned ourselves to buy the XAUUSD above the 2,940, and with my TP target at the 2,955, we had my first TP target for the week hit here with over 140 pips. And since then, price has been very, very choppy. I had a couple of re-entries with modest size of profit. Then the last one I took yesterday morning before I went out closed in a loss, as we saw price drop to the downside back into that key level and ascending trend line. And of course, you know how we use our ascending trend line. As long as price remains above them, we want to be considering buying ideas, and we will not sell unless this ascending trend line is breached and broken to the downside. So yesterday morning, I bought again with the hopes that price may still come back around this area to continue the uptrend move, and that never happened. I missed out on this move. Price came down, and for those of you who capitalized on this, well done, kudos to you, as we saw price action break down and retested the structure to emphasize a shift in market dynamic. And one of the major reasons that could also, besides the profit taking activity, or what could have made market participant confident to start taking profit, which for me I still see it as a short-term move. Well, the narrative from the Fed officials, which I said is looking a little bit hawkish, could be one of the major factors that is giving the US dollar strength against the gold commodity. And then potential for prolonged higher interest rate due to this narrative, where we saw analysts suggest that Trump's tariffs plan could elevate inflation concerns, prompting the Federal Reserve to maintain higher rates for an extended period. And you know, higher rates increases the opportunity cost of holding non-yielding asset like gold, potentially limiting the upside trajectory of this commodity. And in as much as the new narrative is looking bearish, I still cannot lay my hands off the bullish expectation, considering the ongoing fears and uncertainty surrounds Trump's tariff plan, and then the decline in the US consumer confidence we saw yesterday, and of course the wait and see approach which Thomas Balkin mentioned during his speech, for me could still give the gold a second chance. So in preparation for today's trading session, I have a new trading setup which acknowledges the downtrend scenario that has captured this market since the beginning of the week. And of course, if we connect the series of lower highs here, we have a beautiful descending trend line to work with. And you know how we use our descending trend lines, of course. As long as price remains below them, we maintain a bearish bias, and if at any point in time this descending trend line is breached and broken to the upside, I want to start considering buying. Now in the meantime, I already have a buy stop order above the 2,925, somewhere right here. However, I want to be monitoring how the market is going to be reacting to this trend line. Now, the last 3 hours I've seen some rejection here. Now, the question now is, will this trend line cap the uptrend scenario? Will price respect it one more time? If selling pressure persists here, we could see price break down the support line at the 2,896 to incite a long-term downtrend move. So in as much as I am holding on to a bearish bias, considering the fact that price is below the descending trend line, we will not ignore the potentials that buyers could also break out of this trend line. So what I'm looking at here is I have a buy stop order above the 2,925 to continue the uptrend move. But if price breaks out and retests this trend line, I would like to join a buy here and then have my buy stop order triggered at the breakout of the 2,925. Now the only condition that will make me sell the XAUUSD is for selling pressure to persist here. That is, buyers are finding it difficult to break through this descending trend line, and if that continues, then I will want to sell the 2,907 area. So here, let us mark out that level. Okay, 2,907. If we continue to see selling pressure persist there, then I will be willing to sell the breakdown retest of the 2009.07. So let me just place this sell stop orders right away. Let's do that right away. Sell stop order placed. Then the second one below the 2008.96. Very important. So my major bias for the XAUUSD is bearish at this point. However, if price breaks out and retests the descending trend line, we could see this as the beginning of another wave of bullish momentum. Trust me, I will be updating us on both my TradingView and Telegram platform as I continue to monitor price action. Then I'll also be running the go-go challenge in about an hour 30 minutes from now. That means I will be scalping this market today as well. So for those of you who are part of that premium platform, I look forward to seeing you there. Let's navigate this market together on the shorter time frame. So there you have it, my in-depth look at the XAUUSD. I do hope I made myself very, very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take another 5 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Alright, so in the absence of none, I think we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate your presence. And Soldier Pete, I see you. Ivan Gobunovas, I see you. And for those of you who actually are part of the session but who have chosen not to drop a comment, kudos to you guys. So today we were able to take on the 3 instruments on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, and we were able to identify simple trading setups that we are going to be using to navigate this market today. So I encourage us all to exercise patience. Let's allow the structures to mature before jumping into any positions. For those who joined us for the first time, I do hope you were able to gain 1 or 2 things from what we have discussed here today. If you did, you want to be part of our subsequent editions, as we will be running it again on Friday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this asset have done, and of course prepare for another expected volatile session coming up on Friday. So it's on this note I would like to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.